You've got $1,000 sitting in your account right now. Not enough to change your life, but just enough to start the journey. Now,
Imagine this. You take that same $1,000 and instead of spending it or letting it lose value to inflation, you make it multiply. Not once, not twice, but over and over, compounding into tens of thousands. That's not a fantasy. That's a strategy. And it's exactly how the wealthy think. This isn't a gimmick. It's not a get-rich-quick scheme. It's the same slow, smart, deliberate method Warren Buffett used when he was your age. You see, Buffett didn't start with millions. He started with small amounts, just like you. But he applied a unique mindset, a methodical approach, and stuck to a few core principles that multiplied his early dollars into billions. And the truth is, in 2025, you have more opportunity to multiply $1,000 than Buffett ever did at your age. But only if you know where to begin. Only if you stop thinking like a consumer and start acting like an investor. Only if you stop chasing trends and start following timeless principles. In this video, we're going to break down 7 proven steps, directly inspired by Warren Buffett's strategies, that can help you multiply $1,000 in 2025. These steps are simple, practical, and powerful. You don't need a finance degree. You don't need Wall Street connections. All you need is the willingness to learn and the discipline to act. Stick around, because Step 4 will completely shift how you think about money. And Step 7 might just unlock the one decision that separates those who stay broke from those who build real wealth. Let's dive in. Step 1. Think like an owner, not a spender. Let's begin with the single biggest mental shift Warren Buffett made early in his life. He stopped thinking like a consumer and started thinking like an owner. Sounds simple, right? But this one mindset shift will determine whether your $1,000 disappears or multiplies. Now, most people who come into $1,000 instantly think of what they can buy. A new phone, a quick vacation, a shopping spree. The $1,000 becomes a short-term hit of dopamine, and then it's gone. But Buffett? He flipped that logic on its head. Every dollar, to him, wasn't something to spend. It was something to invest. He treated each dollar as an employee, a worker, and he gave it a job to go out and earn more dollars. So here's your first step. Look at your $1,000 not as money to spend, but as capital. That means this isn't just a number in your account. It's leverage. It's your starting fuel. You're not a shopper anymore. You're a micro business, a seed stage investor, an owner. Buffett learned this early when he bought his first shares of Citi's service at age 11. Even then, he wasn't just buying a stock, he was buying ownership. And when you start thinking like an owner, you stop asking, what can I buy with this money? And start asking, what can I build with this money? So what does this look like in 2025? It means saying no to that $500 gadget upgrade and yes to putting that $500 in a dividend-paying ETF. It means instead of spending $200 on dinner with friends, you put it toward a skill course that can pay you back for life. It means using your $1,000 to buy into systems, not consume distractions. Ownership also means understanding value. Buffett says, price is what you pay. Value is what you get. That's true whether you're buying a stock, a side hustle course, or your morning coffee. And if you start analyzing every dollar through the lens of value, not cost, you'll find your money starts working harder than you ever did. Most people never multiply their money because they treat it like something disposable. You have to treat your $1,000 like it's sacred, like it's the last money you'll ever see, and the only tool you've got to build something bigger. That's how owners think, and owners win. Before you even touch that $1,000, ask yourself, what would Buffett do with this? Would he spend it on a trendy piece of tech, or invest it in a business, a book, a brand, or a compounding asset? Because once you think like an owner, opportunities start showing up everywhere. You see them in the skills you build, the time you buy, the assets you acquire, and the people you connect with. So if you've got $1,000 right now, the first step isn't even about where you put it. It's about how you see it. Shift that lens, and you shift your life. Step 2. Invest in what you understand. Here's where Buffett's genius really separates him from the crowd. He never chases hype. He doesn't jump into the latest trends or hottest tech unless he deeply understands them. This is why your second step to multiplying $1,000 in 2025 is this: only invest in what you understand. Sounds obvious, but in a world dominated by social media, Reddit hype, crypto noise, and TikTok finance influencers shouting 10x in 10 days, this principle is rarer than ever. Buffett calls it his circle of competence. It's simple. If you don't understand it, don't put your money in it. Let me explain why this is powerful. When you invest in things you understand, you can make decisions without fear. You're not guessing. You're evaluating. You're thinking long-term, not gambling on tomorrow's spike. Understanding gives you conviction, and conviction is what allows you to stay in the game when markets get rough. So what does this mean practically? Let's say you're working in digital marketing. You understand how online brands make money, what customer acquisition looks like, and which tools drive growth. That means you're more qualified to invest in a SaaS company or a digital advertising platform than a biotech startup or a speculative coin. Buffett famously passed on early investments in tech companies like Amazon, not because they weren't good, but because he didn't understand their models deeply enough at the time. Instead, he stuck to businesses like Coca-Cola and insurance, industries he knew inside out. And guess what? His wealth multiplied because he played his game, not someone else's. In 2025, the temptation to throw your $1,000 at the next AI stock, crypto coin, or startup is stronger than ever. But the real win: slowing down, studying, getting obsessed with how things work, reading 10Ks, understanding market trends, knowing the risks, and then, only then, placing your bet. This also applies to side hustles. Want to use your $1,000 to start a print-on-demand business? Great! But do you understand customer acquisition, fulfillment costs, returns, and margins? If not, don't throw the whole $1,000 at it. Use a portion to learn first. Invest in the knowledge, master the model, then scale. Warren Buffett once said, "Risk comes from not knowing what you're doing." That's exactly what you're avoiding in this step. You reduce risk, increase confidence, and give your money the highest chance to grow. Not because you're lucky, but because you're informed. And here's a bonus truth. When you invest in what you understand, you're also investing in yourself. You're sharpening your thinking, expanding your awareness, and building decision-making skills that compound for decades. So before you deploy your $1,000, stop and ask, do I really understand what I'm putting this into? Can I explain how this makes money, how it scales, and where the risks lie? If the answer is no, pause, study, then act. Because $1,000 invested in what you understand will always outperform $10,000 gambled on what you don't. Excellent. Let's continue with the next two steps, Step 3 and Step 4, each with the same level of deep explanation, around 80-90 sentences per step, flowing as one cohesive audio-friendly monologue. Step 3, multiply through skills before assets. Here's a secret Buffett doesn't shout from the rooftops, but it's embedded in every decision he's ever made. Before he scaled money, he scaled himself. And in 2025, the most overlooked way to multiply $1,000 isn't through stocks or crypto or even business, it's through skills. Let me explain. When most people think of investing, they immediately think of the markets. But your greatest investment vehicle isn't out there in the economy, it's you. Buffett has said repeatedly that the best investment you can make is in yourself. Why? Because the return is uncapped. If you invest $1,000 into a stock, the best case scenario might be 20%, 50%, maybe 100% if you're lucky. But when you invest $1,000 into building a valuable skill, your income potential could increase by 10x every single year. Now, I want you to sit with that for a second. Imagine putting your money not into an ETF, but into a skill like copywriting, coding, sales, graphic design, or AI prompt engineering. Imagine learning a monetizable craft that the market needs, something that companies will pay you for, clients will seek you out for, and the internet will amplify. Buffett didn't become Buffett because he just knew how to pick stocks. He studied accounting. He learned how to read financial statements. He read 500 pages a day. He mastered the language of business. And those skills gave him an unfair advantage. He could look at a company and instantly understand if it was undervalued or had long-term potential.
So the question is, what's your unfair advantage? And more importantly, what skill could you develop this year that would make you 10 times more valuable in the marketplace?
Here's the play. Take a portion of that $1,000, maybe $200, maybe $500, and invest it into a high-quality course or coaching program in a skill that earns. But, and this is crucial, don't just consume the content. Master it, practice it, apply it. Turn that skill into a freelance service, a side hustle, or even a product. That's how the real multiplication begins. In 2025, the gig economy is wide open. Remote work, freelance platforms, AI-powered tools, they've all leveled the playing field. You don't need a degree or a company to give you permission anymore. If you've got a skill and you're good, the market will find you, but only if you've first invested in that skill. Now let's get tactical. Suppose you put $300 into a course that teaches you advanced Excel modeling. You learn, practice, and start offering services on Fiverr or Upwork. Within a few weeks, you're earning $100 per gig. One client becomes 2, then 5. And suddenly your $300 investment has returned $3,000 in income and built a skill you'll carry forever. Or let's say you spend $400 learning prompt engineering for AI tools like ChatGPT, Claude, or Midjourney. You turn that into a niche service. I'll optimize your AI workflow for your business. You land one $500 client per month. That's $6,000 a year, all from a one-time skill investment. That's how you multiply $1,000, not just through assets, but through abilities. Because here's the truth Buffett knows deeply. Assets compound, but skills compound faster. Every new skill opens doors to new income streams, new partnerships, new insights, and new leverage. And once you stack 2 or 3 complementary skills, like design plus sales, or writing plus SEO, you become unstoppable. Suddenly, you're not just a worker, you're a one-person economy. And no recession, no AI disruption, no job loss can take that from you. So before you dump your $1,000 into the next big market play, ask, what skill could I invest in today that will pay me every month for the next 10 years? Because that is how Buffett would multiply money if he were starting in 2025, with skills that scale. Step 4. Protect the downside. First, then play offense. Now here's where it gets even more real. If you truly want to multiply $1,000, you have to do something that almost no one talks about, especially in the hype-heavy world of internet finance. You must protect your downside before you chase upside. Warren Buffett's #1 rule of money? Never lose money. And his #2 rule? Never forget rule #1. Sounds boring, right? But that's the difference between people who keep wealth and people who lose it as fast as they make it. You see, multiplying $1,000 doesn't start with finding the next big win. It starts with avoiding the dumb loss. Because a 50% loss means you need a 100% gain just to get back to where you were. That's math. That's reality. And Buffett knows it better than anyone. So what does protecting your downside actually mean in 2025? It means not putting all your money into one bet, even if it feels like a sure thing. It means not buying into unregulated platforms, not investing in what you don't understand, and not chasing hype when everyone's screaming, "Buy now!" It means holding cash when the market's uncertain. It means setting aside $200 of your $1,000 as emergency money. It means understanding risk management, not just returns. You see, most people fail not because they didn't find the right opportunity, but because they were too aggressive, too soon, with too much money they couldn't afford to lose. Buffett? He waits, he studies, he holds cash. And when the market panics, that's when he strikes. This principle applies outside investing too. Let's say you're starting a business with your $1,000. Protecting your downside means testing your offer before dumping all your cash into a website or ads. It means doing customer research before buying inventory. It means failing small, failing fast, and learning cheaply. If you're going into freelancing, protect the downside by having 2 to 3 clients instead of relying on one. If you're investing in crypto, protect the downside by using a cold wallet and setting stop losses. If you're trading stocks,
Protect the downside by only risking a small percentage per trade. Buffett doesn't try to hit home runs with every swing. He plays defense. He plays patiently. And that's why when the right moment comes, he can bet big with confidence, because his foundation is safe. Here's another way to think about it. The game of wealth isn't about hitting a jackpot. It's about staying in the game. If you lose your $1,000 trying to double it overnight, you're out of the game. But if you grow it slowly, steadily, while protecting your capital, you gain the right to keep playing. And that's where compounding begins. So before you make any move with your $1,000, stop and ask, what's the worst-case scenario here? And can I survive it? If the answer is no, adjust your plan. That's what Buffett would do. That's what smart investors always do. Multiplying money isn't about being bold. It's about being smart. Because once you've protected your downside, you earn the right to play offense. And that's when the real growth begins. Step 5. Leverage the power of compound knowledge. Most people think compounding only applies to money. Warren Buffett would tell you otherwise. In fact, the greatest compounder in Buffett's life isn't money at all, it's knowledge. Let that sink in. Because before Warren Buffett made a single fortune in the markets, he made a daily habit of feeding his brain. He reads 5 to 6 hours a day, every day. He once said, "That's how knowledge works. It builds up like compound interest." And it's this invisible advantage, this consistent, compounding growth of insight, that gave him the edge for decades. Now you might ask, how does this help me multiply $1,000? Let's break it down. In 2025, information is everywhere, but wisdom is scarce. You can drown in content, YouTube videos, Twitter threads, Reddit advice. Everyone's shouting strategies, but very few are quietly mastering fundamentals. Buffett didn't chase the latest hot thing. He built a latticework of timeless financial principles piece by piece over decades. That's what gave him leverage. So your job with your $1,000 isn't just to invest in markets. It's to invest in mindsets, in books, in frameworks, in financial fluency. Because when your brain compounds, your decisions improve. And improved decisions compound into better results every day, every month, every year. Here's how you execute this. Take $100 from your $1,000 and build your knowledge capital fund. Use it to buy 3-4 books that will expand your understanding of wealth, investing, and business. Start with the classics: Buffett's Shareholder Letters, The Intelligent Investor, Principles by Ray Dalio, or Atomic Habits by James Clear. Then go deeper. Read biographies of great business minds. Study behavioral finance. Learn how human psychology affects risk and reward. But don't just read, apply. After each book, ask, what did I learn? How can I use this tomorrow? What mistake can I now avoid? Here's why this matters. Every financial mistake you don't make because you learned something saves you not just dollars, but years. And every insight you act on positions you ahead of the crowd. Let's say you read about dollar cost averaging and apply it. That one concept could prevent you from panic selling in a downturn, saving you 30% of your capital. Let's say you study negotiation and land a $5,000 raise. One book, one idea, $5,000. That's compounding knowledge in action. It's not about memorizing formulas. It's about building mental leverage. Because when you see patterns others miss, you win. When you understand what not to do, you stay in the game. And when you can make better decisions consistently, you don't just multiply money, you multiply everything. That's how Buffett plays. Not by knowing everything, but by mastering the right things and letting time do the rest. And in 2025, when noise is at an all-time high, the person who compounds knowledge quietly will outperform the one chasing hype loudly. So, carve out 30 minutes daily. Read, reflect, write notes, build your own investor operating system. Because when your brain becomes an asset, every dollar you touch has more power. And that brings us to the next major move. Step 6. Partner with multipliers, not time wasters. Buffett didn't build an empire alone. He had Charlie Munger, a partner whose mind challenged his ideas, and multiplied his impact. If you want to multiply $1,000 into something meaningful in 2025, You cannot do it in isolation. You need leverage. You need smart people. You need what I call money multipliers, people, tools, and ecosystems that expand your reach and accelerate your results. So what does that look like practically? Start by looking at the 5 people you spend the most time talking about money with. Are they obsessed with Lambos and lotto wins? Or are they building, learning, and thinking long-term? If you're surrounded by people who spend every dollar they earn, guess what you'll do? But if you intentionally build your circle with people who talk cash flow, passive income, skill stacking, and asset allocation, you'll absorb that thinking too. Your environment isn't neutral. It's compounding you or corroding you. So take action. Use part of your 1,000, maybe 100, maybe just time, to join a community that sharpens your financial intelligence. A mastermind group, a business Slack channel, a Reddit forum with serious builders, a paid Discord of entrepreneurs or investors. Don't go it alone. Go it with intention. Next, look for tools that are multipliers. Buffett used data. He used reports. He studied industries deeply. You now have access to more data than Buffett had in the 1980s for free. Use software like Notion to track your goals. Use Excel to model your savings plans. Use AI tools to optimize your learning speed. Your $1,000 can buy you systems that keep your growth consistent and automated. Let's take it one step further. Find mentors. Buffett's early mentor was Benjamin Graham. That one relationship shifted his entire philosophy. So ask, who do you follow online that teaches you wealth thinking with depth? Who can you model? Who has frameworks? Not just flexes? Here's the power move. Offer value first. Email a creator or entrepreneur you admire. Offer to help for free. Run their newsletter. Edit their blog. Manage their social posts. In exchange, absorb everything. That proximity to greatness is a multiplier you can't buy, but it can accelerate your wealth curve by years. And let's not forget this. In business, partnership multiplies output. If you're freelancing, partner with a marketer who can sell your services. If you're building a course, partner with someone who can film and edit. If you're investing, partner with someone who's already 10 steps ahead and wants to teach. But, and this is key, be ruthless about who you don't let in. Time wasters, complainers, people who only take. In 2025, your circle is your vault. Guard it. Warren Buffett famously said, "You can't make a good deal with a bad person." Apply that to everything. Friends, clients, collaborators. Because a single bad partner can drain your time, energy, and capital faster than any market crash. So to multiply $1,000, build a multiplier network. One great partner, one great community, one wise mentor, one sharp collaborator. Those are not small wins. They're scaling engines. You don't need to do it alone. You need to do it smart, with people and tools that elevate you, and with systems that reinforce your best behaviors. Absolutely. Let's dive into the final move, the one that quietly sits at the top of Warren Buffett's philosophy, but often gets overlooked in the rush to get rich quick. Step 7. Delay gratification and master the long game. Let's pause for a second. You've taken your $1,000, you've protected the downside. You've invested in your skills. You've diversified income. You've compounded your knowledge. You've partnered with powerful multipliers. But without this 7th step, it all eventually falls apart. Because this final step is the glue that holds everything together. It's not sexy. It doesn't promise overnight success. But it's the single greatest wealth accelerator ever discovered by man. It's the ability to delay gratification and master the long game. Now I know what you might be thinking. I get it. Be patient. I've heard that before. But here's the truth. Very few people actually do it, and fewer still do it consistently over years. In a world dominated by fast dopamine, viral content, instant delivery, quick wins, delayed gratification has become a superpower. It's rare, it's uncomfortable, but it is the very foundation of real wealth. Buffett didn't make 99% of his net worth until after his 50s. Let that settle in. He started investing at age 11. He lived modestly. He reinvested profits. He didn't upgrade his house every 5 years. He didn't fall for trends or shiny objects. He played the longest game in the room. And now he's worth over $100 billion. So what does this mean for you? With just $1,000 in your hand? It means you must resist the temptation to cash out too early. If you invest in a stock and it grows 30%, don't pull it all out because you're excited. Ask yourself, what would this be worth if I left it untouched for 5 years? If you start a side hustle and it earns $200 in the first month, don't spend it all celebrating. Ask yourself, how can I reinvest that into better tools, better marketing, better learning? If you start gaining traction with a skill, copywriting, video editing, dropshipping, don't jump ship to the next trend. Stay, sharpen, stack your wins, because the money you multiply in year 3, 5, and 10 comes from what you didn't spend in year. This is where most people lose the game. They get excited at $1,000 becoming $1,300. They spend it, or brag about it. They forget the original plan, and they go back to zero. Warren Buffett doesn't just invest wisely. He lets his investments breathe. That's how compounding works. It needs time, not months, years. Now let's take this even deeper. Delaying gratification isn't just about money. It's about identity. It's about seeing yourself not as someone chasing quick wins, but as someone becoming a long-term wealth builder. It's about playing chess, not checkers. It's about asking, will this action help the future version of me, or just entertain the current one? Buffett drives the same car for years, lives in the same house since 1958, eats McDonald's breakfast and reads annual reports, not because he can't afford luxury, but because he's mastered what most of the world still struggles with: self-control. He doesn't impress people with purchases, he impresses them with discipline. And that discipline is what turned $1,000 investments into empires. So how do you cultivate this? Here's a simple system. 1. Set a 5-year vision. Write out what your life looks like in 2029. Financially, emotionally, professionally. Don't just wish, define it. 2. Audit every action through that lens. When you want to spend on something impulsive, ask, does this serve my 5-year self, or sabotage them? 3. Celebrate long-term wins. When you choose to invest instead of splurge, pause and celebrate. Reinforce the habit. Make long-term thinking feel emotionally rewarding. 4. Track your compounding. Keep a visible chart of your investments. Watch the growth. Watch the snowball. Let that progress fuel your patience. And finally, 5. Make peace with boredom. The real game of wealth is not exciting. It's repetition. It's patience. It's doing the right things over and over until time rewards you in ways you never imagined. So yes, you could flip your $1,000 in a weekend and buy something flashy. But what if, instead, you turned it into $10,000 over 3 years, $50,000 over 7 years, $200,000 over 12 years? Would that be worth it? That's the Warren Buffett way. Not fast, but forever. He once said, the stock market is a device for transferring money from the impatient to the patient. So the final step isn't a tactic. It's a mindset, a way of life. Delay gratification. Master the long game. And you won't just multiply $1,000. You'll multiply who you become. So now you know the truth. You don't need to win the lottery. You don't need a rich uncle. You don't even need a perfect economy. You just need a simple amount, like $1,000, and a system built on wisdom, not hype. Because in 2025, the real power lies not in how much money you start with, but in how intelligently you move it, multiply it, and master it. Warren Buffett didn't get rich by chasing every trend. He built his fortune by following timeless principles, and you just learned 7 of them. So what will you do now? Will you let this video be just another scroll? Or will this be the turning point, where you stop watching and start building? At Wealthmaker Hubs, that's why we exist. This channel is your home base for creating true wealth. Not just fast money, but foundational prosperity. The kind that lasts for generations. The kind that's built with intelligence, strategy, and discipline. So if you're serious about transforming your financial future, subscribe right now, not later, not someday, now. Because we don't just post videos, we post blueprints. Each one designed to help you move one step closer to time freedom, location freedom, and financial independence. And here's your next move. Click on the video showing on your screen right now. It's called The Power of Compounding, How the Rich Get Richer While You Wait. That one idea has built more millionaires than crypto, stocks, and real estate combined. And it's the perfect continuation of what you just learned. Start stacking your steps. Start multiplying your mindset. And remember, it's not about how much you have. It's about how wisely you use it. This is Wealthmaker Hubs, and your journey to financial power has only just begun.